Good afternoon and welcome to the weekly roundup for the week ending Friday, the 16th of October. We hope you're enjoying these weekly reports, and please do feel free to subscribe to receive regular stock market content. And feel free to ask any questions in the comments box below. We would love to hear from you. We also welcome you to follow our free market sector reports on tech, banks and IPOs using the link in the descriptions box below. So this week it's been back the focus on coronavirus. So with resurging cases across Europe and the UK and tighter lockdown restrictions, we're seeing that sentiment has actually taken a big hit. So the FTSE is looking to end the week around 2% lower after 2 weeks of strong gains. And the DAX is also looking for at around 2% losses across the week. The overriding fear here is that these resurging cases, tighter lockdown restrictions are going to derail this very fragile economic recovery that we've been seeing. Over in the US, the story is slightly different. They are seeing a resurgence in COVID cases, but actually the focus there has been very much on the idea of additional US fiscal stimulus. At the beginning of the week, there was some growing optimism that the Republicans and the Democrats in Congress would be able to agree on some form of fiscal stimulus deal. As we're moving towards the end of the week, that's actually looking increasingly unlikely. In fact, it's looking increasingly unlikely that they're going to agree a deal before the November the 3rd elections. So that's actually weighing on sentiment just towards the end of this week. As far as the US indices are concerned, we've had the Dow Jones, it's looking to end the week just slightly in the red. The S&P is pretty much flat on the week so far. Another big theme this week has been Brexit. So the pound is actually down around 1% across the week as we wait to hear whether Boris Johnson will give the all clear to continue with Brexit talks. So let's not forget that Boris Johnson sort of put this line in the sand as the 15th of October, so yesterday, and we've got the EU summit, which started yesterday, where they're assessing progress in Brexit talks so far. The bottom line is, or the feelings and the comments and the headlines that we're getting is sufficient progress hasn't been made, but there is this growing sense that Boris Johnson could just say, let's continue talks anyway. The pound is trading around 129 versus the US dollar. At that level, the assumption is that some sort of bare bones deal will be agreed. There will be something. As far as oil and gold are concerned, they've pretty much traded, well, oil's traded pretty much flat on the week. Gold's just down slightly, around 1% on the week, and that's basically owing to the stronger dollar. The dollar's been in demand on safe haven inflows because of the coronavirus cases sort of unsettling investors, but also because of concerns that the additional fiscal stimulus is just not going to arrive. And we've seen that, or not going to arrive in time, sorry. I think the assumption is that it will eventually come, but as I said, the data is being pushed back. Data out this week from the US, jobless claims have actually increased to 898,000 initial jobless claims. That's up from last week, and it's also a 7-week high. So that really highlights the need for more US stimulus. As far as stocks are concerned, the big deal this week has been US banks reporting. It's been a little bit of a mixed bag. We've had outperformance by Goldman Sachs. They had a 94% increase on quarterly profits. Also did well was JP Morgan and Citigroup and Morgan Stanley. They've done well. And what we've seen there is that their trading arm has very much underpinned these results. So high volatility in the financial markets and the bond markets has helped push the trading revenues much higher. And then we've got the other banks such as Wells Fargo and Bank of America. Now they haven't done as well. They're roughly in line with expectations, but still the stock sold off, and that's basically because investors are concerned about their sort of core consumer lending business, and also net interest income was also pretty weak, given that the interest rates are at zero and the fact that the Federal Reserve says that they're going to hold interest rates at that level for the foreseeable future. Other stocks that have been in focus have been the airlines. Now, with rising coronavirus cases, we're seeing the return of that sort of coronavirus trade, which is very much retail hospitality under pressure and airlines under pressure. Now, Ryanair said that they will be fly 40% capacity from November to March. Now, that's down from 60% capacity, which they had actually forecast previously. This November to March period is, it's traditionally a very difficult period for airlines anyway. This has made it even more difficult. We've got more countries being restrictive on their travel, and also people aren't wanting to travel because of corona. So other airlines that were under pressure this week as well. British Airways own AIG for the same reasons, and they traded down just shy of 10% across the week. And to end on some positive news, we've got Just Eat Takeaway. They have traded up 12% across the week, a phenomenal week for them after they reported impressive third quarter sales. They reported a 46% increase in orders in their third quarter. In the UK, they saw sales jump 43%. Now, I think with tightening lockdown restrictions coming, and people being more nervous about going out to eat, we could actually see some more upside for this stock, I think, across the coming months. Please, as I said, do remember to subscribe, and any questions or comments, then please do add them in the box below. Thanks very much and have a good weekend.